conversation. We do understand that the COVID has had implication on life in general. We've had many people lost. They're no longer with us. People who are supposed to protect us, the health professionals, some of them have also had to lose their life because of the COVID situation. We want to take this opportunity to commiserate with families and congratulate all the professionals who are working to keep us alive in this situation. But as an industry, we also recognize that there has been diverse impact across the industry, upstream, midstream, and also downstream. So what we're trying to do with this conversation is to go beyond what the general perspective really is on what the impact has been, to look at individual cases relative to the businesses, to see how it reflects within our own context, and to see how strategies are being fashioned to actually ensure that the industry remains resilient into the future. So we are grateful that you were able to join us to share with the public who are also joining us today from across the world to listen to what the experts are saying to be the impact on the oil and gas industry in Africa. So today, we are grateful that the Chief Executive of the Petroleum Commission of Ghana has accepted to open this event for us, which is going to run from today to Friday. Tomorrow we're having a conversation with national oil companies, and then Friday we listen to the service companies also in the industry. And to do this, as I mentioned, the CEO of the Petroleum Commission will open the conversation for us today. And he, as a background, is an astute lawyer. Before he became the CEO of the Commission, he has worked over 16 years in that profession, very well known in Ghana. And assuming that position, he has also meticulously, championed local content, local participation, ensuring that we can build capacity for the industry right here in Ghana, and also learning from experiences across the world. So we are very grateful to have Mr. Egbert Fabio Jr. Joining us to do the opening for us. So we have an extensive profile of him on the links that we shared and on our website. So I would entreat all of us to read a bit more about him. But not to take too much time, I want to hand over to CEO of Petroleum Commission of Ghana, Mr. Egbert Fabio, to do us the honors of opening this conversation for us.
Thank you very much.
Thank you so much.
Thank you very much, and good afternoon. So before I go on, permit me to introduce a few of my colleagues who are with me. To my left is Prince Benjamin Abuaji, the Deputy CEO of the Petroleum Commission. And then next to him is Mr. Richard Adodakun, our Director, Resource Management, and also Acting Director, Operations. And then also to my right is Mr. Kweku Boateng, Director, Local Content here at the Petroleum Commission. And next to him, we have Mr. Kwesi Ajmamenu Senya, who is the Manager in charge of Business Advisory and Enterprise Development at the Petroleum Commission. So having done so, I proceed to maybe speak to the issues and also give the keynote address. So Executive Director of ACEP, distinguished participants, ladies and gentlemen, it's a pleasure to join you on this platform to discuss and find solutions regarding COVID-19 and response strategies in Africa's oil and gas industry. I would like to express my thanks and appreciation to ACEP for inviting me to deliver the keynote speech at this forum. The oil and gas industry suffered a major jolt early this year with the outbreak of COVID-19. Oil prices have decreased by over 50% since January 2020 on the back of a plummet in oil demand. Since the beginning of the coronavirus pandemic, there has been a loss of 1/3 global demand, that is more than 30 million barrels per day. The virus has brought about a level of uncertainty for oil traders and resulted in more than a 300% drop in crude prices, the largest one-day drop for crude oil in history, as WTI oil prices plunged from $17.85 to $37.63 on the 20th day of April 2020. Indeed, April 2020 has become the first day in history when oil recorded negative prices. Whilst the unusual circumstance of negative oil prices may not be repeated, many analysts say it is a harbinger for more bleak days ahead. International oil companies responded to the fall in price amidst the health concerns by freeing up cash flow and increasing liquidity access, scrapping new capital-intense projects or lower priority projects overseas. The supply chain industry was in a dark position coming into the crisis. Significant overcapacity had emerged and profitability collapsed after 2014. A new wave of business and supply chain reconfiguration, technological acceleration, and partnerships with customers are expected after COVID-19. While the oil industry remains fragile, the recent modest recovery in prices suggests that the year may end on a more optimistic note. Now, the impact of COVID-19 on the upstream industry, fellow participants, the upstream oil and gas sector and our economy have suffered significant shocks during this pandemic. Firstly, the impact on the economy. Preliminary analysis of the impact on the real sector shows an expected decline in growth rate of GDP from 6.8% to 2.6%. Although oil production remains at approximately 200 barrels per day, oil production and revenue forecasts for the year have been significantly affected, largely due to the postponement of the pecan development. According to Ghana's Ministry of Finance, the total estimated fiscal impact from the shortfall in petroleum receipts, shortfall in import duties, shortfall in other tax revenues, the cost of the preparedness plan, and the cost of the coronavirus alleviation program is 21.42 billion Ghana cedis, or $3.89 billion US, which is 2.5% of revised GDP, with a shortfall in petroleum revenues alone being 5.7 billion Ghana cedis, or $1.04 billion US. Secondly, regarding the impact on work obligations and operations, the ongoing or new projects across Ghana's oil and gas value chain are likely to face numerous challenges in terms of project execution, planning, and risk management. A few of them are worth mentioning here. The first being, the year began with the Commission approving work programs and budgets for E&P companies in the exploratory and appraisal stages. The companies were due to undertake various drilling campaigns, acquisition and interpretation of seismic, geological, and geophysical data. The Iban 1X exploratory well of ENI, Nyankum 1X and Chenchen 1X appraisal programs of AGM, Afina 1X appraisal program of Springfield, exploratory well drilling campaigns of AMNI, Eco Atlantic, and GOSCO have all been postponed. The projects were estimated to cost about $324 million US. It is also worth noting that the initial period or extensions granted some of the companies under the respective petroleum agreements were due to expire in the course of this year. However, the impact of the pandemic has necessitated the freezing of work programs and a decision to restore the periods lost as a result of the freeze. Thirdly, the critical operations and maintenance works on production facilities scheduled for the year have either been stalled or cancelled. This has been exacerbated by the skeletal workforce operated by many companies in the effort to adhere to safety measures and social distancing. Thirdly, ladies and gentlemen, the impact of the COVID-19 pandemic is particularly visible on the demand for the services industry, including EPC. This segment of the oil and gas value chain is largely price sensitive and operates on low profit margins with a heavy dependency on materials management, supply chain, workforce management, and various other economic parameters. The industry had attracted a considerable number of investors after the first licensing round. 13 potential entrants, including BP, Antoil, Shell, among others, visited the data room and were awaiting the next bidding round and limited negotiation periods to acquire blocks in the sector. All of those intentions are in abeyance today as a result of the pandemic. COVID-19 is likely to delay Ghana's second licensing round as government prioritizes managing the domestic impact of the virus and waits for investment conditions to improve. Licensing rounds that proceed in the short term risk receiving fewer or no bids due to low investor confidence. Under the current circumstances, oil and gas investors will likely be reluctant to commit an exploration budget to licensing rounds in the near term due to the economically challenging conditions and uncertainties created by COVID-19. Looking further ahead, the Commission expects that licensing round activities will be subject to significant uncertainties, stemming both from the unknown length of the COVID-19 demand shock and the duration of the current excess supply. Aker Energy was expected to submit its POD in Q2 2020 and subsequently make the final investment decision to commence the project. The Pecan development is valued at 4.4 billion. It's postponed or was postponed in March 2020 as a result of the COVID-19 pandemic. On local content development, fellow participants, over the past 6 years, we have seen a steady increasing push for more local content in the sourcing of goods, services, and labor as new oil and gas investments come online. Through our local content initiatives ranging from prescriptive primary legislation to more collaborative public-private efforts to balance appropriately local economic development with the need to tap the global supplies and labor that make an investment commercially viable, Ghana has achieved remarkable growth in local sourcing and in-country investments. This pandemic has, however, shown the weaknesses in the local supply chain, i.e. manufacturing, construction, and industrial. Both restrictions, or border restrictions, I should say, rightly imposed as a result of COVID-19 has led to the unavailability of critical spares, goods, and materials in the industry. The compelling need to fly in expatriate specialists required for critical maintenance works on offshore installations in the midst of the pandemic has contributed to delayed schedules. The rude awakening of this pandemic should afford the industry the opportunity to invest in local supply chain as well as training and development of indigenous Ghanaians. Local businesses were significantly hit by the pandemic. The pre-COVID-19 outlook of the industry resulted in considerable investments in infrastructure, personnel, and technologies in anticipation of participation in major projects. Indeed, over 98 contracts worth over $398 million were awarded by Aker Energy, AGM, ENI, GOSCO, and Springfield for the period Q1 or Q4 2019 to Q1 2020. Similarly, contracts previously awarded by ENI and Talo were due for renewal, and tendering processes in respect of such contracts had begun. The cancellation of these contracts, such as the 5-year MES drilling contract, which was terminated in June 2020, together with associated services, would have a devastating toll on local businesses. The consequential effect of the cancellation of these contracts, amidst the already reduced workforce in the industry, resulted in layoffs of both expatriate and local personnel. Over 450 Ghanaian workers in Aker Energy, Talo, Schlumberger, Halliburton, Baker Hughes, etc., are expected to lose their jobs as a result of the pandemic. The industry had chalked a modest success in localizing various positions, including critical positions in major companies. By the various localization plans, the Commission expected about 40 roles to be localized this year. The impact of COVID-19 will have serious ramifications on local content development and localization efforts of this country. The question is, how do we surge on during and post-COVID-19? The Honorable Deputy Minister of Energy, in charge of petroleum of the Republic of Ghana, has hinted that government is willing to look at the impacts of COVID-19 on operations of E&P companies and come out with initiatives to protect their investments. Also, we seek to strengthen safety policies and measures in companies to ensure safe and secure environments for workers. The Commission has, in furtherance of this, instituted a weekly HSE briefing by the operators of the FPSOs, the 3 FPSOs, I should say, on the status of the pandemic and safety issues in their operations. Local companies, trade associations, industry players are also being encouraged to ensure supply chain resilience through redefining strategic partnership approaches. We also strive to ensure that upstream companies create the organization of the future in both talent and structure. The industry can radically flatten hierarchies, reduce bureaucracy, and push decision-making to the edge. IOCs must review their corporate structures to cut costs, improve operational efficiencies, redesign their business models, simplify their internal processes and procedures, realign job roles and positions, empower local business units, and reduce headquarters' influence on local operations. A new blend of talent can re-stimulate some of the innovative and pioneering mindsets from past periods. We also need to create a new era in local content practice in the age of COVID-19. Even in the throes of what is perhaps the most severe economic shock in a century, there is little doubt that the crisis will bequeath a new world order when it comes to supply chain management in the oil and gas industry. For us as a regulator, or for us regulators, policymakers, corporate leaders, and supply chain managers, The key will be to ensure that we neither overreact nor return to the status quo of traditional global sourcing from few established companies located either in Houston, Aberdeen, Singapore, or Stavanger. Getting that balance right will be the difference between winning and losing the war against COVID-19 for many countries and companies. COVID-19 has challenged the IOC models for sourcing goods and labor in global supply chains. It is forcing IOCs to come up with new solutions on how to safeguard the supply of goods and services, both of which depend on a healthy workforce, in the face of a health crisis that brings commerce and industry to an abrupt halt, if not checked. We, as industry players, must now start to frame out new approaches to oil and gas supply chain management that acknowledges the risks associated with the new global economic threats such as COVID-19 and other pandemics that may be born. Finally, as the industry regulator, the Commission is assessing the potential that can be exploited in the current challenges and the risks that they pose to local firms in the industry. We would also adhere to the discipline of finding the optimal balance between sourcing globally and locally to ensure business continuity. The big difference now, however, is that our calculus for optimization of local content must take into consideration new values and cost drivers related to the risks associated with pandemics and their impacts on business continuity. Ladies and gentlemen, I wish to express my sincere appreciation once again for the invitation to participate in this program and hope that at the end of the event, participants will go away better equipped to deal with some of the issues debated and emphasized here. Thank you all for having me, and I look forward to the rest of the deliberations. Thank you very much once again.
Thank you very much, Mr. Febo. I think this is a comprehensive overview of what is happening in Ghana, and I think most of the issues may find reflection in other contexts and jurisdiction as well. I'm sure you have really examined the total situation in Ghana, the fiscal impact, the impact upstream on services, and importantly, the exposure on the supply chain situation, because if you cannot control the supply chain, which is difficult across the world, then progressing on many of the activities becomes extremely difficult. So we will now proceed to listen to the august panel that we have to discuss the issue from various contexts to see how different or similar these issues are. So to do that today, we have Mr. Alan Mugashi, who has to represent Gina. Unfortunately, Gina had to take emergency exit from this conversation, which is quite regrettable because we're hoping to ensure that it wasn't all a male affair, but we could balance that with a female voice in this conversation. That is not to say that we don't have women. We believe that there are women in the industry, but it was definitely not within our control when we want representation from business to participate in this. So we will work around it in future to see that we can balance the panel to have women representation on this. But Alan, as far as the subject is concerned, is capable to deliver on the subject. So he is a well engineer and project manager at Springfield Group, Ghana Limited, a very experienced industry person. So I'm not going to bore everybody with the profiles. We have uploaded everything on the website, so you can check on that. We also have Mr. Fadul Abdallah Ahmed, a friend of ACEP and a very experienced individual in Sudan with the B2 operating company, a JV partner in the oil fields of Sudan, the production platform. So he is also here to tell us the context and how this COVID is impacting their business. We also have Mr. Anthony Pierce with Tallow Ghana Limited, over 30 years experience in the oil and gas industry, more or less a grandfather in the industry. And I'm sure he will give us a big perspective from Tallow's end, really, to let us know how this COVID has impacted them. His profile is also available on our website. And we have Ezekiel Adebayo Adesani, also a friend of ACEP, appeared on many of our platforms. He is the executive lead of the Energy Study Group in Africa, and also with Nigeria LNG. And he will also give us perspective on the sector as it affects their business and the industry in Nigeria. So I would call on Alan to start for 10 minutes to give us the context from your business perspective and to see how, within this situation, you are strategizing to actually overcome what COVID has presented to the industry. Alan.
Good afternoon, everyone. First of all, apologies from Gina. It was at short notice that she needed to pull out because she wasn't feeling well. So she was kind enough to send me her presentation, which I'll go through. So I would like to first thank the organizers of this very important webinar, the ACEP, Mr. Ben Boache and Pauline Einerman, for pulling this off so efficiently. I'd also like to say hello to Egbert for his insightful keynote address and the entire PC team. Hopefully, when we are done, we'll draw some synergies from amongst ourselves to generate solutions and strategies that will be helpful and supportive in each company's context. For those of you who do not know Springfield E&P, Springfield has, in a little over a decade, developed into one of Ghana's and Africa's energy companies of repute by building strong relationships and partnerships with suppliers and end users who have come to rely on the professionalism, integrity, and commitment of its personnel. It was incorporated in 2008 to pursue exploration and production opportunities in Ghana and in West Africa as a whole. The process of acquiring the block began in 2012, but the block itself was finally awarded by the government of Ghana in March 2016. Springfield E&P is currently the operator and the majority interest holder of the West Cape 3 Points Block 2, with the GNPC, the petroleum company, Ghana Petroleum Company, and its exploration subsidiary, Exploco, holding the remaining interest. From 2016, Springfield has gradually built capacity for its upstream operations with significant mix of experienced international industry practitioners working alongside Ghanaian counterparts. In 2017, April, Springfield contracted the world's largest seismic vessel, the Ramford Titan, owned by PGS, to undertake a 3D broadband seismic data acquisition on the block. Springfield then went on to drill the maiden well in October 2019 and made a significant discovery on the Afina well. The results from that drilling campaign more than doubled our proven oil reserves and added 0.7 TCF of gas to the existing discoveries. The current undiscovered potential of the block is now estimated at over 3 billion barrels of oil and gas in multiple leads and prospects within multiple reservoir units. Let me now turn my attention to the issues for our discussion this afternoon. First of all, the impact of COVID-19 on our operations as an upstream operator are significant. I think it is obvious to everyone that COVID has impacted virtually every industry globally, and the oil and gas sector perhaps has had the biggest hit because of the additional challenge that the rapid fall in oil prices has had. For us at Springfield, we had just emerged from our highly successful drilling campaign when this happened, and we are moving on to the next stage of our plan, which was to drill the Afina appraisal well. However, obviously, things did not go as expected because of the lockdowns and the interruptions in the supply chains. As a company, our first response to the challenge was to make sure that everyone, all our employees, are healthy. And consequently, a decision was made to keep all non-essential staff at home. So everyone from the beginning of March, when the lockdown was announced, was required to work at home. Now, the challenges as a company that we are facing are probably quite common to all the other upstream companies. But obviously the first one was the fact that our IT systems and infrastructure was tested they were significantly tested because no one expected the whole world to go into such, a situation where we all had to rely on the IT infrastructure and no one in the offices. So first of all, being able to get all the teams to talk to each other remotely and access the servers in the office remotely was quite a challenge. However, as times have gone ahead, we have become more creative and we have also invested heavily in our IT systems to make sure that everyone can easily access the servers and easily go on with work from their homes. Having to manage and lead technical and non-technical teams remotely is also quite a challenge. As you probably are aware, Springfield is a small company that has got a big mix of very experienced industry practitioners and a relatively young team that relies on the experiences of the senior technocrats. Now, having to get the junior team members to concentrate without physical direction that comes at the comfort of being with experienced people in the office is a challenge. And that is something that we have to try and face daily. However, this has also been a time for making sure that everyone responsibly takes on their roles and delivers to make sure that the company activities go on. There's also a challenge that we've got of the teams that are not, because of the reality that they are not in the office. Most of what they do happen by interactions with a lot of the other people in the office. Teams such as the HR departments, the supply chain departments, logistics departments are increasingly struggling to be at home. And it's also important for the leadership to understand that these teams need to be kept constantly motivated. And this is something that we have to kind of think out of the box and make sure that, even while at home, they still have some energy to draw on and make sure that, they are not losing the energy to deliver. Now, we've also had, as Egbert said, we've also had to defer all our work programs for this year, especially the ones that are so heavily operational. So, things like interacting with the contractors for mobilization of services, anything related to the mobilization of services for drilling the wells, those have all been put on hold, hopefully up to a time when we are all comfortable enough that we can deliver these projects with a healthy pool of resources. There's been slow progress on investment opportunities. Springfield has for the last 6 months, has been engaging with the market to make sure that we can get some partners into our block. But obviously the fact that the oil prices are not favorable at the moment makes it very difficult for us to even lure investors into our data rooms. Now we're hoping that with time the oil prices will and we've seen that they've actually started creeping up, and we are hoping that investment opportunities will probably start to be seen coming up. Now, to mitigate these challenges, the first one is that we all have to invest in proper IT systems. I think it is clear to everyone that the world runs on IT infrastructure, and this is the best time for each organization to understand the importance of IT systems and also to invest heavily in making sure that they are secure and all the data that the companies possess is securely kept. Communication is one of the other areas where, I think we can do a lot. The fact that people are not all gathered in one room at all times means that we have to devise ways of communicating efficiently. So what Springfield has done is started regular meetings, daily meetings, but short, to just kind of get an understanding of what everyone is working on, and then assign tasks deliverable tasks to teams and make sure that everybody in the team has got something to keep him or her busy. We've got a list of priorities and the things that we call the must-dos for each team. And these are tracked on a regular basis to make sure that we don't lose track of the important activities. We've also got a list of nice to-dos, and those are things that keep the teams busy even when we do not necessarily have a lot of the must-dos. Now, we try to keep the employees motivated. It's obviously a big challenge, especially when most businesses are in survival mode. Every business is trying to keep costs and expenditures to a minimum. The biggest issue with employees is that they all understand that it's a period of uncertainty. They speak to each other, and when the likes of other companies lay off people, then obviously employees become uncertain about their own jobs. We've tried to minimize our costs, but we've also looked at exploring alternate options to keep our teams intact without necessarily laying them off. And some of the options that we've looked at is, try and maybe think about salary cuts, but keep people together, especially during this time. We understand that, this is something that caught everyone unaware, and laying off people may not necessarily be the best option. The lessons that we've learned from our experiences and for future operations is that no matter how well you plan ahead, there will always be some events that will break or expose your contingency plans. And it's important to be ready to deal with these events as they come. I mean, one case example that I can say is obviously one of our operator companies within Ghana has continued with operations, and they've somehow continued to do this and get all their supplies in and all their people in, which is something that I think is very commendable. Again, I emphasize good IT infrastructure is worthwhile investment for every organization, and then good relationships with stakeholders like the Petroleum Commission and GNPC and the JV partners to ensure that they give you some guidance and support your requests for approvals in times such as these. You also have obviously to have a bit of flexibility in the work programs, because as Egbert said earlier on, that a lot of the work programs have been postponed, and it's therefore important to have a look at and see which of those activities can be delivered during this time, and then the others that are operationally dependent can probably be deferred to a later date. And lastly, from a national oil company perspective, the lesson is that I think we as IOCs need to have frequent interactions with NOCs and make sure that they are constantly made aware of our struggles or our paths to make sure that they can support us with any technical and regulatory challenges that we may have. This would go a long way to impact our work programs and make sure that we deliver to support the entire oil and gas sector in Ghana. Thank you very much, and that's all I have to say today.
Thank you so much, Alan. I would no doubt you were able to speak to the issues as they affect Springfield, and I'm really struck by the revelation that you need a stronger IT system to be able to share your data and also communicate remotely. And I understand this is an industry where data is so important and very expensive, and you don't want to be exposed. And sharing that, you require a very robust, IT system that allow you to conveniently do that without any fear that it could be breached. I'm happy that you haven't as yet, if I got it right, laid off anybody, but maybe through the question time, we will be able to see what, if you can come up again, what the limits could be for you before you get to that breaking point. So thank you so much for your presentation. I'll come to you, Mr. Ahmed, now for you to give us the context with you in Sudan. Thank you. All right, Mr. Ahmed, I think you have to unmute yourself.
Okay, hello everybody. I'm very glad to be invited by ACEP to participate in this webinar, which I think it will be valuable for all of us to share the experience during this pandemic. Let me give you an introduction to my company, TUBIOCO. TUBIOCO is established in 2017. Succeeding an expiry of NEPSA run by a JOC. In 2017, it was operating only Block 2B, located in west of Sudan. Currently, TUBIOCO is operating 3 blocks, Block 2B, 2A, and 4, which is producing around 35 kilo-barrel of oil per day. With an oil in place in these fields, currently around 3 billion. We are operating in these 3 oil fields through 5 FPFs, field processing facilities. And all together, it comes to a central processing facilities in Heglig. This is processing all the field from TUBIOCO plus the oil from South Sudan, which is another country. The pipeline is coming through this CBF. From this CBF, we export to the refinery and then we export to the marine terminal in Port Sudan. The company has 1,200 employees. In 2018, we had a major achievement where we managed to complete the resumption of oil from South Sudan in Unity State. We are also operating our own power. We are operating our artificial lift system. And this all together has made our employees in the field in that area, our headquarters in the capital Khartoum, but our fields in West Kordofan. This is making the employees around 600 employees. We managed to reduce the employees until 600 employees to run the operation. And then we had the lockdown started in end of March to 2020. And this was one of the challenges that we had the lockdown, but we have a lot of employees that normally they shift every 28 days. But with the lockdown, this will be extended. So I will explain how we have gone through this, one of the challenges. Of course, we face the oil price challenge. But at the same time, we had increase in the cost because of the pandemic. Because most of the services you got, the price for the service has increased because of the pandemic. We had to pay a lot of compensation for the employees, for the contractors, actually to continue the operation. This is in addition to the major disturbance in the supply chain. In 2 parts, some of the material and equipment, we couldn't get it in time because of the lockdown. And some, we got it in time, but the operation actually slowed, especially in the drilling part and the workover part, which it's kind of JIT kind of material. So it should just come and be consumed. And when you keep it in a store, sometimes you get damage. So this is also increasing the cost. Also, we have new contracts started just or was supposed to start maybe in April and May. And this has been disturbed a lot. And we had to either continue with all contracts with some compensation or with no contracts. What we have done during this time, actually, we managed to keep the operation with the minimum staff we can, and with the minimum, I mean, the normal operation. Any intensive operation like drilling, seismic acquisition, this has been stopped, but we managed at least to our normal operation for the production has continued, and we managed to actually, especially the central processing facilities has continued until today, working for Sudan and South Sudan. We actually working from home, and also all this connection has played major role. However, as said before, I think investing in IT, making sure that your IT systems are working fine, and also you're thinking about the digitalization of some of the processes that can be done. We have to do it different through digitalization. Some steps has started, and I think in the future, I think everybody should be looking at this and should adopt this approach. I think the most challenging part was, the part related to the employees or to the human being. You have people at the headquarters working from home. Actually, very challenging actually to get everybody in the morning to start having the task and respond timely, concentrating. At the same time, you have people in the field, in the oil field, stranded there for several months. You have to keep them motivated, and then you have to look for ways how to replace them actually. Recently, we managed to replace most of the employees, but through very tough, health restrictions. We have to actually take them through the testing of COVID-19. And then if you are negative, then you can travel. You have to travel. We test actually, when we get the result, then we immediately travel them to the field. Those who are positive, then they have to stay for another 3 weeks and then retest again. With this, we managed to do, but it was very challenging because to take somebody to the test was where he doesn't have any symptoms, and to get him in the, testing itself, the result was as positive or negative. But fortunately, we managed now to replace almost 80% of the employees who were there for the last 3 months. Another thing which I think helped a lot, we had when the government announced the lockdown, we managed actually to establish a central ECC, emergency control center. This actually has helped us, central ECC for the oil companies. And this has helped us to integrate all our resources together and then to face this pandemic. This was a very good step actually to at least minimize the impact of this pandemic. And it helped a lot with the regulation, with our coordination with other authority like the health ministry and transportation ministry, all the authorities in Sudan. And I think it was the only way that, the major factor we achieve what we have achieved today. For the supply chain, there is no solution so far. Although things got a little bit easy as we are relaxing the lockdown a lot. And today actually is the first day that actually the lockdown is almost over. So we are in the last stage of the lockdown. However, I think for the supply chain, we have to come with actually solid plans considering such, emergency cases in the future. Our backup plans should include or should consider actually this kind of pandemics in the future. Okay, I think I have ready for your questions. Thank you.
Oh, thank you very much, Mr. Ahmed. I think you stayed within the time. That's really helpful. And I'm seeing similarities with Springfield's experience. There are things you can control. You can keep some workers at home, but you can keep some automatically will have to be on the production platform to continue working. And that is a big challenge. The supply chain is also another difficult area to navigate because you have a global industry that, inputs are coming from all over the world. So thank you very much for the perspective. I will move quickly to Mr. Pierce. But before that, I want to let all the participants know that you can send in your questions ahead of time if you have them, so that we would address them when the presentations are done quickly. If you watch this later, you can still send questions to through our website or through our emails, and responses for you. But the questions can keep coming. So, Mr. Pierce, I'll hand over to you at this point. Thank you very much.
Yeah, thank you, Ben, and thank you, everybody, and thanks for the words from the Petroleum Commission at the start of this presentation. It's very, very insightful to hear Egbert talking, and of course, Abdul there, and previously the words from Alan. So look, you may or may not know much about Tullow. I mean, Tullow is very, very well known in Ghana, but it's no secret that we've had very many company challenges in the last few months. We lost our CEO late last year. We've had a significant challenge to our share price, which has been decimated in the last 6 months. We had a bad year last year in terms of missing some of our key production targets. And we've also had some pretty intensive capital projects that we committed to here in Ghana. We've got operational units in both Kenya and Uganda at various stages of development, not really moving very far. And so I think then with the onset of COVID in early March and the subsequent oil price fall, I think I would go as far as saying we have been a company in crisis. We already were a company in crisis, and we've gone even deeper into crisis. And the production from Ghana is both critical for the company. It's even more critical for the country and for our partners. And we very quickly realized as the onset of COVID came in, that really the only thing keeping the company going was the operations here in Ghana. Our non-operated assets in Africa are also hugely important to us, but in terms of keeping the wheels on the company, everything we've been doing out here has been absolutely critical since the onset of COVID. So as the emerging threat started to unfold, I think that we very quickly realized as a company that we had to get planning. And I think one of the first things that I would advocate has been a success factor for us was early planning. It was early as February and early March that our teams were starting to recognize the threat of the COVID virus, and we were already making plans. And I think a lot of our planning was instigated by some very switched on local staff in our teams who have been through the Ebola types of issues and were very, very aware of the devastating potential impact. So I think through February and early March, we were planning lots of things. We had lots of scenarios, and we're starting to think about what might happen. And a little bit like Fadel and Alan previously, our focus, our mission statement from the middle of March was always very much around, we have to protect the health and welfare of our people. Secondly, we had to make sure our operations were safe. And thirdly, everything we could do to prevent the virus getting to our remote locations offshore was the key objective. For those who are unfamiliar with our operation, we've got 2 FPSOs in off of Ghana, and at the time, or currently, we also have a drilling rig that's drilling for us. And at the time of the probably mid-March, 20th of March, we had 1,400 people offshore, because at the same time as the drilling and the production activity, we also have been engaged in a major project to put an offloading buoy on one of our facilities. So at the time of COVID really kicking off, we had 1,400 people to worry about. Now that's a significant number of people to have in the field. And I was listening to Fadl there talking about the people in the remote locations. It's an extraordinary challenge to manage that, where you've got a huge local workforce and expatriate experts who come in for certain aspects of their role. So as things unfolded through March and into April, I think we were very quickly able to springboard off our plans. One thing we had done, we'd set up a COVID emergency response committee from the start. Now, I think looking back now, one of our big success factors was, in a normal crisis, you attack a crisis with a small group of people in a committee, and then you have pods of people working separately. We chose not to do that. We chose to have one big committee of between 17 and 20 people. And we've met every day since the 20th of March. Every single day we meet, even at the weekends, for half an hour. And we revisit our plan, and we revisit our contingencies, and we revisit all the things that we're doing that have to be kept going. And I think that's proved really valuable, because most crises only last a few weeks, maybe only a few days. This has lasted a few months already and could last many more months. And so keeping the team fresh, spreading the load, and having people aware of the situation has been really important for us, because we're working multiple fronts in terms of our battle against COVID. In March and April, we very quickly recognized we needed to install charter flights. So we worked with the Ghanaian government, and we've had a charter flight every 2 weeks. That's been very, very helpful in relieving and crew changing our international staff. And we're very grateful to the Ghanaian government for supporting us with that. We've also had quarantining. So very similar to Fadl's experience there, we implemented quarantining right at the start. Any local employee who was going offshore was quarantined for 14 days, and any international arrival was quarantined for 14 days. And they were initially not going offshore until they'd had a negative COVID test, a PCR test. And then things started to get into a nice rhythm. We kept our oil and gas production going. We kept our drilling operations going, in spite of significant challenges through the supply chain, but we kept the people supply chain going, and I think that's been really important. We kept the people moving on and offshore, despite the challenges, and that did at least keep things moving forward. We then had a bit of a shock in late May, where we found a couple of cases offshore, and we recognised that somehow through the quarantining process that we'd adopted, we'd slipped. A couple of people had slipped through the net. And we had over 50 people on one of our installations who were COVID positive. Now, this was a shock at the time. I hasten to add that they were all asymptomatic. A couple of them showed some minor symptoms, but in large, those people were all asymptomatic. So we then had a major logistical exercise. We had to move everyone back to Takoradi, which is where our supply base is. And we then did further testing of our whole quarantining set of facilities, and let's remember here, we have had up to 400 people in local quarantining hotels in Takoradi over this period with our partner contractors, and that's worked really well, by the way. But when we tested more broadly in that area, we found that we had also locally, so our local staff and hotel staff were also carrying the symptoms of that were tested positive for the COVID. And so we had a very, very difficult late May, early June, where we had to literally shut ourselves down in terms of people and regroup and move people to single locations. We got a lot of help from Ghana Health Service. We got a lot of help from the Petroleum Commission. And we worked through a fairly complicated situation. But the beautiful thing about that situation was that because we'd prepared for these things in February and March, we never panicked. We weren't happy with what was happening, but we had action plans in place. we'd practiced, we'd done tabletop exercises. And so when these things happened that we weren't expecting, we were able to adopt our action plans that were already pre-prepared. And that was very, very useful, because I think it stopped the team from panicking. It's easy to panic sometimes when unexpected events occur and you forget your plan. So that was very important for us, and we came through that. And I would say now, as we get into July, we've got ourselves back into a recovery mode. We've learned some very important lessons. One of the lessons is that we've reduced our Takoradi local workforce quarantining period. Now, we were keeping people too far from home for too long, and so we've reduced our quarantining now to just 8 days. But everyone has to have a PCR test before they go offshore and be proven negative. We've been working very hard with Ghana Health Service to optimize the testing regime that we employ, so that we can test people and get their results quickly. Again, so we don't have to hold people in quarantine for great lengths of time. And we've recognized also this very dynamic. I'm sure the other speakers will also recognize that there's no blueprint for this. We're making things up as we go along, and we're having to adapt and be very pragmatic. We're having to work very hard with our contracting partners and with our governmental agencies. And so I think as one big team here in Ghana, Tullow, our fellow operators, we share our flights. We've had Springfield people and DNI people on our charter flights as well. So there's good partnerships being shown there. We're working with our contracting partners really hard, because it's a global problem that we're all suffering the same things from. And so there's no point working on your own like this event today. Sharing is by far the best way forward, because everybody's thinking of new ideas as we go along, as we adapt to the new normal. So I think if I were to sort of leave the podium now, Ben, I would just say the 4 things that I think I've learned back is that, you know, we set ourselves up for the long term. We set ourselves up with a crisis management team back in March that's still in place today and has done a phenomenal job. We've been very pragmatic, continually being pragmatic. That you read many things in the press which are very frightening, but you really get forward progress when you are pragmatically solving these problems with your partners. Thirdly, working with the governmental agencies, Ghana Health Service have been really stretched, and we're very grateful for the support they've provided us. And then fourthly, I think I mentioned it already, working with our contracting partners. You know, we're all in this together, and so many hands make light work, and that's a sort of an overview of how we've dealt with the issues over the last 3 or 4 months. I'm happy to take some questions later on in more detail if required.
Oh, thank you very much, Anthony. I think I'm learning that, I mean, situation can push you to move beyond the comfort of the industry into different collaborations, you know, in different sectors, now having to deal with the, you know, health ministry and the agencies in the health sector to ensure that you can manage, you know, a crisis that can hardly be anticipated within the oil and gas industry. A lot of the learnings are quite similar. Maybe within the question times period, we may want to see how, you know, the fiscal planning could also help you resolve some of these challenges. People are thinking that hedging will always do the trick, you know, in terms of the price. How has Tullow done it? And what are the lessons that others can also learn? And that same could also be posed to Mr. Ahmed. Your situation is even more dire because you sell to the local market, essentially. You know, so in terms of price, what are the avenues to really mitigate the impact on your operations? Thank you very much. So at this point, I'll hand over to you, Ezekiel, to give us your perspective from the Nigerian context.
Can you hear me? My home perspective will be a bit quite different. Try not to localize my own perspective. I will share a bit of experience in Nigeria, where I will talk generally about what we need to do in terms of strategy and what are supposed to be our response as African oil producers. So I'll start with COVID-19. COVID-19 seems to be the biggest offset that you can see in 70 years in terms of demand destruction, energy demand destruction. And IEA estimated that decline about 6% in global energy demand has been created by COVID-19. This is about 7 times bigger than the fall we found in 2009 financial crisis. So it's just to show us the magnitude of the problem that we're actually dealing with. Now, a bit of time, people talk about the prices and the oil prices, but I would like to talk about a bit about my sector, which is the gas sector, and what we see happen within the gas sector during the COVID-19 pandemic. The first thing we realized was a convergence of prices. So you find the TTF, the JKM, the area up, all converging into a all-time low prices. And Europe being the last market of the last resort market could not even take a surplus that was found in the market. So you found that as far as you lock down, so every 1 month of lockdown, you destroy 1.5% in terms of demand. So that is what the statistics have shown. 1 month of lockdown means you have lesser use of electricity and lesser use of gas. So you found that gas prices became a bit too low and became a bit challenged, whereby markets like JKM, Japan Korea market, that used to have a high price for gas in a couple of years back, are even lower than the area price at a certain period. In terms of oil, we see also a very downtime because of the 3 problems. It was the triple whammy. You have the COVID problem, you have the OPEC also having Russia war with Saudi Arabia in terms of price war. And you also the inventory level getting so high. So we saw a lot of destruction. And how does it affect the gas sector? You know that a lot of gas that you see being produced or being liquefied as LNG are associated gas. So the moment the upstream have a problem, you need to shut down the well. The moment you cannot evacuate your product and you have to, the prices are bad, that means the well needs to go down. And if the well needs to go down, you need your gas, your associated gas will be impacted. And as your associated gas is impacted, your feed in the gas sector are basically going to be impacted because a lot of gas feed in Nigeria are associated gas. So I will just touch a bit about how does it impact Nigeria. So it was a bit of an industry going through a destructive impact in productions and delivery activity due to COVID-19 and other associated factors. So we find that oil producers were reducing oil drilling to regulate to the low levels because basically prices were not good. The cost of barrel of production per barrel in Nigeria is quite a bit high. And when the prices get so low, it becomes more of a challenge for you to make an economic sense in continuing production. Then we also found that there was a limited personnel on site due to quarantine measures. So you hardly could take enough people to go on site. I think the last speaker spoke about how they were giving 2 people 2 weeks before they come into site and for them to check their status before taking them on site. So because of that, you have limited personnel that can go, that can be on site. And what does this create? This created a lot of delay and interruption to rig operation in Nigeria, both to supply and also to service delivery. So it became a bigger problem of trying to manage that. And also when you look at due to the containment protocol, the oil and gas value chain that are labor intensive also were facing workforce shortage because of this protocol, because there was lockdown. People cannot move from state to state in Nigeria. They were actually locked down. So there were interstate lockdown. They set restrictions within the country. So when you have workers that are actually that fly down from another part of the country to their workplace, they could not travel. And this created a shortfall in terms of workforce. The market also was really terrible in terms of bearish. It was really bearish. As I have mentioned the gas sector, whereby you find out that the buyers were canceling or declaring force majeure to actually cut across. And this is not only Nigeria, this is global. It was a problem that you find in the gas sector globally because of COVID-19. So, like I mentioned before, I said the impact of the lockdown was a real demand destruction. So this is the first time we are finding global energy demand going really, really down. So, and IEA did some estimate to us to give a partial understanding of how this impact of lockdown affect production. And you found out that to every limited restriction, you have like 15% in a week in terms of production, energy demand destruction. In partial destructions, you find like 25%. In food lockdown, you find like 35%. And this actually created a 1.5%. So if you find from January, from February, when the whole world locked down in March, will have about 1.5 destruction in terms of energy demand, especially in the oil and gas. So if you look at the energy mix, the major challenge that you found, which is particularly in Africa and also in the rest of the world, is basically that fossil fuel were the biggest decline, because coal was, for the first time through the Second World War, was actually having the greatest decline, followed by oil and gas. So fossil fuel were most hit by this energy demand fall. So I'll quickly go to what are those things that need to be done. And that is, I'll go to our response as a country, as a continent. What are the things that we need to do? For us to have all these challenges, there have to be a way to respond. This is a new normal. Business are not usual the way you used to have them. So to ensure competitiveness, you need to actually tweak both your business and your operating model. And every business that is quick enough, the last speaker talked about early planning, that is quick enough to really understand that this challenge is going to change, has really changed the landscape of how we work in the oil and gas sector. So they need to, for you to remain competitive, cost competitive, you need to tweak your business model and operating model. The second one is that there has to be a total rethink of how your business operation works. We've seen that a lot of time when people ask for working from home, we find it difficult to say, okay, can people really work from home? But for a couple of months, we are all working from home and people were actually delivering. So there's a real rethink in terms of operation. So you need to make sure the adoption of digital capabilities, and that is the new norms going forward. So you will find a new world whereby digital capabilities within organization actually help in business delivery. So also you need to build resilience, agility, and adaptability in terms of production excellence and commercial dexterity, because these are really critical period whereby is the company that can adapt that will survive, because it's more of adaptability, it's more of agility. So you need to build that resilience. You find out that the biggest animal that survive we're not the only animal that survived. We're not the biggest of animals. They were not the dinosaurs. They were the animals that can actually adapt to the environment. So we need to build resilience. We need to build agility. We need to build adaptability, and coupled with production excellence. We need to do things differently in terms of how we operate, how we do our operation. And we need to also find, in terms of dexterity, in how we deliver our product to the market. Number 4, you need to also safeguard your supply chain. You need to safeguard your supply chain flexibility. And I think the moderator mentioned about the supply chain. And these have to be end-to-end. You need to create a new strategic partnership and alliance for you to actually be sure that your supply chain needs are met. So it is not the period whereby we can actually say, okay, I have this relationship. You need to be very flexible for you to actually make sure your supply chain needs are met. Also, you need to find a way to design your portfolio, and you need to have a total move to capital, to areas of your business that have maximum return opportunity. So this is not the time for you to actually be sentimental how you respond to this. You need to reevaluate business, reevaluate portfolio, and we need to reallocate what are those capitals that move to where you can have a maximum return opportunities. So if it's condensate, it's oil, if it's gas, you need to look at how the product you are putting from the upstream to the downstream and try to optimize and see where you can actually flow capital to where you have maximum opportunity. Also, in this opportunity, there are also opportunities for you to look in a broader perspective to see about taking advantage of possible M&A move with peers in industry. So there are a lot of companies that cannot survive alone. There have to be opportunity for mergers and acquisitions, and also to see how you can take those advantage for you to actually position yourself for the next strategic move. Also, you need to build an organization for the future. There need to be a new set skill. The set skill that you need for the future are not the same skill that you need now, that you have pre-COVID time. So you need to build an organization and for the future and align that organization with talent strategy in line with the new environment. So you'll find that today people need to have an IT skills, people have to be GTSEC compliant and all that. And this is what is going to happen in the next couple of years going forward. The way we work will completely different. The skill set that we need for work will completely be different going forward. Also, we need to look at how do we look at performance metrics? How do we relate that to our new norms and adjust our execution in line with current reality with disciplined delivery? So we need to be very, very agile to look at our performance metrics in line with what is the new norms. This is the time we need to look at what are the things we're measuring, what are the things that we want to deliver, and our execution must always be in line with current reality with disciplined delivery. And lastly, which is point number 9 for your response, is that I think the CEO for the Ghana Hall, I mentioned that you need to engage all critical stakeholders on your new reality, because without you engaging them, both your shareholders, the regulators, your partners and all that, you need to engage all critical stakeholders on your new reality and rework your expectation management, because your stakeholders have a level of expectation pre-COVID time. And now with this reality, you need to rework that expectation management with them for them to really know that business are not the way it used to be. And you need to know those stakeholder you need to keep informed, stakeholder you need to get engaged with, and stakeholder you need to involve. So these are the major response that you need for you to survive in this COVID period. Thank you very much. I appreciate it.
Thank you very much, Ezekiel, for your presentation and a bit of macro perspective there to get us thinking what we need to do next, and also zooming in on what has happened, particularly in the gas sector. So I see that the questions that are popping up, some of them have been answered already, but maybe thinking through what has been discussed so far individually, we can wrap up whilst I highlight some of the key areas we should be considering. Mr. Pierce, I mentioned that you may want to walk us through some of the survival strategies in terms of the fiscal, ensuring that you can at least anticipate some of these price shocks into the future. Alan, I see your situation is even more peculiar because you are an emergent company. You don't have the cash flow yet from the sector. So you have to dip into your pocket to finance operations, and you still have to keep pumping in money without any cash flow to actually offset some of these challenges. Mr. Ahmed, I think there's a specific question on the impact on cost of operation relative to the COVID. If you can address that for us, and maybe as part of it, just wrap up as well. So I will start with Alan, and you give your closing remarks and address some of these issues for us.
All right, thank you so much, Ben. I mean, it's important to understand that all the oil upstream companies are in different stages of their operations. And one of the things that has worked in our favor was that operationally we were not, we had just finished drilling the Afina well. So most of our teams had been demobilized back, and we had a small team of people working on the planning for the next well. So with that, with that being the context, it was easy to, first of all, to facilitate these teams to work from home. But also we had, like I said, we had reduced significantly. Most of the consultants were out of the company already. So the team that, the staff that we have at the moment are our usual staff that would normally be employed even without the operations. And but that being said, it's still important that to understand that this pandemic obviously created a lot of difficulty for us. And one of the things that I mentioned earlier was that we had a look at the possibility of laying off people, but then it was decided, that it's probably better to allow ourselves to have salary cuts, obviously in different tiers, up to, I think someone asked what was the percentage, but I think it was up to 50% for some people. But that would then, and it was, it was for a short period of time. Well, short at the beginning until we understand the extent to which this pandemic will continue. But that being said, these are things that can be done as a first line, rather than going straight to laying off people, because the difference between this kind of situation we are in and the others is that say in 2014, when the oil prices were down, they were only affecting our sector. So even if you laid off people, they had opportunities to go out and look for jobs elsewhere. While in this one, if you lay off people, then they have no options. They can't go get jobs in other factories or other sectors. You understand? But I think generally speaking, it's something, the pandemic is something that cannot be understated. And if you ask me, I do not know how long it will continue. If we get to a point where the business cannot survive, then obviously the drastic measures will be taken. Thank you very much.
Thank you very much. I hope you don't get there. Mr. Pierce, so if you can come in at this point, but also there's a question that I hope you can address for us on, how you're dealing with the psychological well-being of these staff who are also enduring the scare of the COVID within your company.
Yeah, thanks. A couple of things that just from a Tullow global perspective, Tullow has adopted a hedging philosophy for a number of years now. And I think it's proved itself this year through the very low prices we were seeing through March and April. That was in place already. It wasn't specifically for COVID. There's available information in the public domain on Tullow's hedging policy, but there's no doubt that through this period it's been very helpful. So that's the side of that. The people element, and I think Alan made a really, really good point there. This is not an oil field problem anymore. This is not just the oil field; it's everybody. And I think that's what's made this so intriguing. Is it's not the oil industry fighting for survival; it's everybody fighting for survival. As I said right at the start, people have been the focus from the start of this. And of course, if you're a family in crisis, if you're a company in crisis, drastic things have to be done. And I noticed a few of the questions about national service people and graduates. Graduates and national service people are critical for us as a company. But unfortunately, the first thing that has to go as you're starting to sort of survive is those people have to be, they're the first people we're told to work from home. Like the other panel members, we've got all of our staff pretty much working at home at the moment. So the IT challenges that they've all been facing are just the same that we're facing. So how do we keep morale up? I noticed some of the things that Alan said around setting goals and having must-dos and can-dos. we've adopted a philosophy where we try and do a sort of global a town hall across teams every week. Simple things. We've encouraged all of our team leaders to hold small daily meetings with their own teams and talk about lots of different things. We've had the huge challenges that I'm sure everybody's facing around homeschooling, sorry. And that challenge where people are having to both work and look after their children. So we've been as generous as we can with providing people time and flexibility. I think that's the idea. I think that the old paradigms of how we work have gone. Flexibility, digital working, flexible hours. The number of people who've said to me, my life is so much better. I'm not commuting 3 hours a day to get to the office in Accra. Can you imagine that 3 hours a day, how productive it now is? Those 3 hours could be spent with children or could be spent working. So there are many positive things that are going to come from this, and I think that's what we have to keep promoting. The final thing I would say is that through all of this, I mentioned at the start around the production, what's been remarkable for me is that both of our production facilities have probably had the best production records that they've had for the last 2 years. So there's something very interesting about what is it that a crisis does that maybe helps you focus on what's really important. Because I say this with some caution. The last month we've not seen a production trip on either of our facilities. That's a really interesting thing for me to explore. What is it that's making that happen? Is it that we've reduced activity to a sensible level? Is it that everyone's awareness is heightened? Is it that everyone gets the gravity of this situation? I don't know, but there's many things going on which we're in the middle of, Ben, and I think that looking back in 6 to 9 months' time is going to be fascinating to see what we actually have learned and what is really different. Some of the things that Ezekiel was saying, they're fascinating. These are new phenomena that we're just starting to find our way through. So I've not really answered your question, because I think there's more questions out there than we even know about.
Thanks so much. It's great to understand that it's not been all gloom. We're learning new ways of adapting to the world. So, Mr. Ahmed, I'll come to you. But before that, Mr. Fable, I just want to alert you that there is a question to you. I think you answered it partly in your speech, but because it relates to the service companies who are not, directly contracted by the state, they want to know, the service companies who already have contracts with EMP companies, what are the plans for them? I don't know if that can be answered maybe towards the end of the discussion.
Okay, all right.
Towards the end of the discussion. Thank you. Okay, thanks. So, Mr. Ahmed, I'll come to you now.
Okay, with regard to the cost impact, as explained, the cost has gone up despite the oil price decrease. We had an experience in 2014 where oil price has dropped, and then how we adopted to this new situation by reviewing the contracts, doing contract price reviews, sharing the misery actually with our partners in the contractor side. However, this time it's very difficult to share it with somebody else, said by peers. This is not a company problem. This is everybody's problem. So everybody's in this misery. Cost has to go up because of many things. We start with even just running the fields. It's an additional cost of having people there actually stranded. Then you have to provide different kind of services, and this is one of the strategies we adopted during March. Is that at least we have to give or we have to change the life in the field to be actually more entertaining, and then to keep the morale up. So this has, of course, a cost impact, a huge cost impact. Because we have to adopt things new to us, and also at the same time, during this pandemic, every service you request it has a double or triple price in the compared to the normal days. The other factor affecting our cost actually is a supply chain disturbance and the losses we had because of this. This is, I think, explained by most of the speakers. One of the questions that I answered privately, and I can share the things here, with regard to the psychological or the moral of the people. Actually, for the people working from home, we adopted something like we have to call, we still can, some people can work and can come and work to the office. And now I'm talking to you from my office. But at least a small group has to come every day, even on Friday or even on weekends. And we can provide all the health precautions. We can keep all the health precautions. This, I think, most of the people, except those who are having an age problem or they have a chronic health problems, they visited the office for some time, and then we kept them fresh. For the people in the field, actually, we have adopted to have like different life in field, which can be attractive and can help them to stay there for this long time. In addition to that, we also had prepared some for their families here. Actually, some visits for their families, and also trying to provide some help. It's not much, but also to provide some help for the family, so at least they can like relax and make sure that all the basic needs of this family are satisfied. Thank you.
Right. Thank you very much. Ezekiel, I'll bring you in, but I want you also to address the opportunities that this presents for Africa trade, particularly when you are talking about gas. We have the West Africa gas pipeline, which has not been really optimized. What does this tell us, in terms of trying to optimize some of this infrastructure and improving on them, so that your gas that you're shipping to the US can now be piped to Ghana, Cote d'Ivoire, and the others to also utilize it. Okay.
Thank you very much. One of my own before I address that, we also need to be aware that due to the OPEC cut, Africa is actually having a decline of about 13% in their production volume. And that translates to about 260 million barrels per annum for the whole 2020 that Africa is going to actually reduce due to the OPEC cut. So it's not only the pandemic, we also have issues that have to do with the OPEC cut. In terms of gas, this is the age of gas. There's no doubt about it. And when I said we need to look at our portfolio and look at what we can do differently, that is what I actually was talking about. If you look at gas in Africa, especially Nigeria, you'll find that gas does not have a life of its own. A lot of gas actually depends on oil. Gas is treated as a secondary commodity. And that era is supposed to have elapses, because that's why you didn't see hubs, markets, and the hubs that you supposed, the gas hubs that's supposed to have been developed, especially within West Africa. So you find Ghana, Cote d'Ivoire, and some other countries within West Africa, because of epileptic nature of the West African gas pipeline, trying to have a gas contract outside the African continent. So, or gas import outside the African continent. So to me, this is an errand whereby oil producers have to look at also to go out and look for gas. Because now knowing fully well that since you cannot produce oil and there's possibility of second wave of the virus, there's also a possibility that the OPEC Plus agreements might not really be sustainable with over time. This is the time we need to start thinking about gas demand within Africa and going to look for non-associated gas. because I found that a lot of, I don't know about Ghana, but in Nigeria, a lot of non-associated gas feed have not been developed. So these are the time you need to look at, how do you create that market? How do you create that synergy, that demand, that clusters of demand within West Africa, and harmonize them and create opportunity rather than looking at exports outside the African continent. This is the time you need to look at, how do we make our people to consume more, because we produce, but the consumption level is low. Those are the opportunity this pandemic is creating, that we need to look inward and see how we can actually meet our energy demand by those things that we produce within the African subcontinent. Thank you.
Thank you very much. Some of the questions have actually been addressed through the speeches, so I wouldn't want them to be rehashed. So participant, please, maybe you may need another opportunity to go back to the video and watch it again. We will send it the link, after this conversation. So what I would at this point want to bring in the PC to address the question on contracts. And there was also a question about national service. I don't know if that can also be answered by PC on what the plans are, because if the industry is trying not to shed the people in the industry, how then do you take on people who are qualifying to enter into national service in the industry? So what are the plans? And they also want to know if there is a stimulus package for, service companies. Is there any mitigation plan for them? If we can attempt this, I'll be grateful. Thank you very much.
Okay, so thank you very much, Benjamin. I think that I've also seen another question where somebody is trying to find, Nanaya Kwatin Kumi is trying to find out that we said 450 workers have been laid off. It's for virtually Talo and I believe Springfield. But let me put it on record. I didn't say that 450 workers have been laid off. Our projections are that by the end of this COVID pandemic, about 450 workers may be laid off. So that distinction should be clear. It's other 450 workers have been laid off, but it is a projection that if things stand the way they are now, it may be the case that about 450 workers may be laid off over the period. Yes, so having cleared that, I think the first issue is with regards to contracts. Yes, so this issue of, I saw a question about force majeure provision, what have you. The lawyers will tell you force majeure is a contractual right and obligation as between parties, so that if in your contract you didn't make provision for force majeure, then you will not have a right to, let's say, as a contractor, has an obligation towards the other party in the contract to provide certain services to stop. But it's advisable at this point that even if your contract from the beginning did not have force majeure provisions, the two parties, or three parties, whoever are parties to the contract, can look at what is going on around the world and quickly do an amended contract to bring in COVID-19 pandemic as a basis for force majeure to do that. Otherwise, what will happen is that there's also another legal principle called frustration of contract. Then frustration of contract will come in, and then the contract is terminated automatically. So it is up to the companies and the parties to the various contracts to look at the circumstances we are in right now. And I will always encourage that even if force majeure provisions are not clearly laid out or spelled out in your contracts, you can always do an amended contract and have that. I said this on the back of the latest authority from the English High Court in the matter of Talo Ghana Limited versus Seadrill, where the English courts, determined a complaint from Seadrill over termination of a rig contract or so, and laid out the principles clearly. And that decision of the English High Court has become what we lawyers call a locus classicus, that today, immediately it came, it's not too long after it came, COVID-19 has come. And so even when people are trying to lay claim to force majeure, the question is that the court said, and this is, I'm not quoting the court directly, but this is what the court said in paraphrasing them, that even if you have force majeure provisions in a contract, but it is proven that there are other considerations beyond the force majeure that resulted in a company terminating a contract, then that company will not be entitled to the defense of force majeure because there were other considerations as well. So that should be a wake-up call for all of us as we go on to contract. So yes, force majeure, we definitely have to look at it critically. And I encourage companies to now going into contracts. This pandemic has hit us, said that it will be a basis to bring pandemics and epidemics as a basis for force majeure in contracts. We all know now that once we say pandemic, it has a global outreach, and when we say epidemic, it has a regional outreach. In jurisdictions where, for instance, cholera, may become an epidemic, if it comes up, should it result in the invocation of force majeure, it is up to the parties to the contract to determine that. So, Ben, that is what I want to say with respect to that. On national service, as Anthony said, we are all anxious to have service persons work because it is part of localization and indigenization efforts. But these are not normal times. We will look at what the National Service Secretariat brings, and then we as public service entity, that's the commission, will have very little to do if the National Service Secretariat brings a service persons. But for the private sector players, looking at COVID-19 ramifications, I don't know what they will decide, but as a public service entity, the Petroleum Commission will look at the National Service Secretariat. And then on stimulus packages, I am afraid what it is that as a commission, we don't have that cash. This may be an issue that the Ministry of Finance or the Ministry of Energy will have to speak to, but as a commission, we do not have any stimulus package as we speak for contractors and subcontractors and allied entities in the industry. Okay, and then there is also another question from Fred Japata. Mr. Fable Jr., please, what is the latest update concerning the appointment of it? I think those matters are at the Ministry of Energy. The Ministry of Energy is engaging with Talo on that. So I will ask that you abide the outcome of the engagement between the Ministry of Energy and Talo. Yes. So this other question about due to the COVID-19, is the commission ready to extend the expiring date of local companies' petroleum permits? Okay, so the position as a commission, we've taken as a commission is that in the period of the lockdown, there were no movements. And so that window was not available to companies that had permit renewal issues to bring their permits here for renewal. So that during that period, we froze time obligations on such companies. But since the lifting of the lockdown periods, our offices have been open and no part of the country is in lockdown. So we will not extend, permit renewals or permit requests during this period. There's free movement, so you can move. So please let us have them. So that is what I want to say in reaction to that question.
Thank you very much, Mr. Fable. This is very insightful. And at this point, I want to thank you all very much. As and when question has come, we will try and see if we can engage you to get responses for the individuals who are asking them. But we want to draw the curtains down here. And I want to thank you, Mr. Pierce. I want to thank you, Mr. Ahmed. I want to thank you, Mr. Adesina, and Mr. Mugisha. We are so grateful for this opening conversation. Has been really, really insightful. Tomorrow, we are continuing to listen to the national oil companies to see how peculiar this challenge has been for them and what the strategies are from their perspective. And then on Friday, we'll continue looking at the service companies. So some of the questions that have come, we will note them for the appropriate engagement tomorrow and Friday. Some can be answered better by the service companies, others by the national oil companies. So on this note, we want to thank you very much. The team at PC also, we are grateful for hijacking your time today and participating in this. So we are most grateful. Thank you all very much. I'll see you tomorrow.
Thank you.
don't really know.